And it's not a shock to people. The Chinese economy has been struggling, largely because of a deliberate set of policy choices by policymakers in China to bring down leverage in the real estate sector and reduce its importance to GDP. We've now seen some efforts at stimulus that have been announced. Where do things stand economically in China, in your view? And how does the performance of the Chinese economy matter to non-Chinese investors or to those without investments in China?
For most investors, I would emphasize the thing that matters for China from a global investor's perspective is mostly their economic activity and the second and third order consequences on major developed economies of that economic activity and on things like oil prices and commodity prices. Chinese markets, some people invest in them offshore, but they're not a huge portion of many investors, asset allocation or book. And so when you're thinking about China from a global investor's perspective, really focusing on the economy. And if you look at what's going on there, China's experiencing a debt deleveraging. A more provocative way of describing it is a depression. And the important thing to recognize there, depression is not a term that is meant to denote a particular rate of GDP growth. It's meant to denote a type of macroeconomic dynamic, which is where debt deleveraging occurs and where an easing of monetary policy is insufficient to create a cyclical bottom and reacceleration of the economy. And in those circumstances, so the US, for instance, in 2008, it's a perfect example where interest rates went to zero. And in October of 2008 was like, interest rates are low, time to borrow and reaccelerate this economy, right? Because you had that deleveraging dynamic that was overwhelming. And that particularly occurs in an environment where asset prices are falling rapidly, which creates disincentive to borrow and buy assets or invest in houses or
balance sheet impairment.
Right, exactly. Balance sheet impairment. And so that's basically what's going on in China. And, for many years, Chinese authorities did nothing related to this, or by and large, nothing that was meaningful in response to it. And really, since the start of the year, I'd say they're going through what I'd say is a very typical policymaker experience related to a deleveraging, which is, the first thing they did early in the year was very, very sentiment oriented, which is they said, stocks are down, we're going to get the national team to buy stocks, and stocks went up. And then they quickly realized that actually doesn't do anything. And the reason why that doesn't do anything is Chinese households don't really own stocks. And who cares if stocks are up or down? The problem is debts are super high and people want to delever. And so that created pain. And then what we've seen here is round two is what I describe as an asset-focused stimulus, not an economic-focused stimulus, which is, again, more support to the equity market to get a pop, and then also trying to support housing market in a variety of ways. But almost all of it is supply oriented. And the problem in China is not supply. Anyone who wants a loan can get a loan in China. The problem is nobody wants to borrow and nobody wants to buy assets because assets are going down rapidly. And the level of prices is still, Shanghai, Beijing, the level of house prices relative to incomes are still the highest in the world by a mile. So if you look at that, you'd say, it's not good value and it's falling. Why would I ever lever up and take advantage of that credit supply that's going on? And that essentially will likely create disappointment. This round will likely be disappointing because it's still too sentiment oriented and too asset oriented and probably not big enough is the reality. There's the valuation of empty apartments in China is $10 trillion. And so China says, we're going to give our banks $150 billion. And you're like, yes, but the problem is orders of magnitude bigger than that. Chinese housing is the world's biggest asset class. It's easy to forget that in the West or not even realize that in the West. It is the world's biggest asset class, the world's biggest asset. Some of the world's biggest stimulus and credit restructuring to deal with that problem when the prices are falling. And so odds are this will, be another source of disappointment. And it's only until we get to economic easing, meaningful economic easing, particularly fiscal easing to support households, to support their demand, and a restructuring of the bad assets and the bad debts to basically reprice the assets at a fair market value. Those two steps need to happen in order to actually get this resolved, but we're not there yet.